Welcome, everybody, to another episode of the Good Deeds Note Investing Podcast. I'm your host, Chris Seveney, along with our co-host, Jamie Bateman. Jamie, how are you today?
Doing well, Chris.
Good. So today is kind of a special episode, especially for me. Jamie's been on the podcast now for several months. But for me, I am coming on the 2-year anniversary from launching the first episode. And it's, exciting. And I look back at where we started, where this has gone, and remember recording like the first few episodes and how, the audio sucked, it broke in and out, using horrible equipment, the typical stuff most people go through. And, Jamie, even, you, when you started out on podcasting, you kind of got to get in a flow and a rhythm, and it's not natural. But once you start doing it, it's actually fun, first off, and then it becomes more natural. And it actually, I think, helps when you're talking with people and in conversations, just because you're more, you just feel more confident from that standpoint. So today, is probably about the 125th plus or minus episode. So you look at it about, once a week, which we've tried to average and so forth. And, we want to talk about just, where the podcast has gone, where we're going to probably, continue to take it, as well as just talk about growth over that period of time, because 2 years is not really a long period of time, but you can still have significant growth. But before we do that, as always, we will start with our trials and tribulations, and I will turn the floor over to Mr. Bateman. You wouldn't tell me his before we started, so I'm curious, where he's going with this.
Yeah, so it's not so much something I've personally dealt with recently, but it does involve both of us, Chris, at some point.
Wait, he's already dragging me into this. Okay. Where's Brian Gallagher? Let me get my attorney on the line.
I just found out, I got an update on a particular CFD. I got the update in the last 24 hours, which was kind of surprising. So you sold me a land contract for deed, I don't know, last year and a half ago, something like that, when I was really looking for low dollar deals just to kind of get in the game, and the borrower was paying, so it was a performing deal. It was not a bad deal. And
I'm not going to confirm nor deny this.
Right. And so I'll try not to say where it is, but this borrower is absolutely nuts, and she has caused me a good bit of stress. And end of the day, a few months back, so she's the kind of borrower there where she take up your entire weekend with emails and phone calls and just craziness, and then she wouldn't pay for 6 or 8 months, and then she'd reinstate. We've talked about those kinds of borrowers in general being the hardest to deal with from a servicing standpoint and a financial standpoint. So a few months ago, I decided to sell this thing because it just, I was fine with taking a slight loss on it. It just was doing me no good as far as a return goes. But I had actually started to, I was dragging my feet on that because this borrower, the owner of the property, the owner of the, I guess my borrower, who would be the owner of the property once she pays off the land contract, she had actually, out from under me, created her own little lease option land contract, which was essentially, she scammed somebody else. And instead of paying me, over the months, she would take that money, who knows what, but she would charge the current occupant of the property. I think she sold it to him for almost $50,000.
Oh,
it's from you for $6,000.
Yeah, I was gonna say it was a low balance. She was probably taking the money that she's getting from him and using it to renovate another property that another note investor had lease option to her.
So this guy that she was essentially ripping off, she would call him every month kicking and screaming if he didn't, if he was a day late on the rent. Whereas, she wouldn't pay me, and that was fine. But anyway, I had really gotten in contact with her borrower, her tenant, who currently lives in the property. Super nice guy. Started really taking a liking to him, and I felt terrible for him. But a few months back, I decided to sell this CFD because I just didn't see a way out, meaning it was doing me no good. I wanted to help him, but I just didn't see how I could. I'd worked with a couple different attorneys and started the forfeiture process a couple times, but because there was, she paid down a little bit, and there was, she had equity there that both attorneys that I was working with told me that I would likely have to go through the whole foreclosure process. So it just wasn't worth it from a financial standpoint. So I sold this thing at a slight loss. Totally fine with that.
I didn't know you sold it.
Yeah. So I sold it a few months ago, and I just found out in the last 24 hours that the guy I sold it to is actually going to sell it to the tenant, okay, the occupant of the property, and he's going to foreclose on her. So it gets a little confusing, and I haven't done the best job of explaining it, to be honest. But so the guy that lives there has put supposedly over $50,000 to $60,000 into this thing. He really wants this property.
That's genius, by the way.
Yeah,
if I understand this, is you own there's a property you owned that had a borrower who was on land contract.
Yep.
That borrower basically turned around and sold it to somebody else, which she really didn't have the right to do because she wasn't the owner, to a guy who's been living there who renovated it.
Right.
The guy who's in there renovating it is buying the land contract from whoever, a person you sold it to.
Yeah.
So he can turn around and foreclose, and then he gets the house, and then he won't even have to pay her.
Exactly. So
awesome. This is something I should have thought of. Why? I'm pissed right now. I didn't think of this.
I literally have, I could show you on my phone. I have text messages to the guy I sold it to saying, this is genius. I'm really disappointed in myself. For not having thought of this. I really was trying to help this guy. I was racking my brain. How can I help this guy? Obviously I wanted to make a profit as well, but this guy's a, foster parent. You can tell he's just a good guy. He wants to retire in this place. He just, and she's not, in my view, a good person. So I really was trying to help him out, but now that I'm looking at it in hindsight, my thinking was kind of limited. I never thought of selling in this land contract that I owned. I only thought of taking the property back and then selling it to him on seller financing. At the end of the day, it just made no sense. I couldn't figure out, what to do with it. So I guess he mentioned something in passing to the current owner of the land contract who I sold it to about foreclosing on her, and that's what they're going to do. So I'm really interested in this deal, just from a kind of a human standpoint, and just getting creative. And that's my takeaway from this is my thinking was kind of limited. I really should have talked to more people about it, and not beating myself up over it. But it's a learning experience, and I'm really hoping that this guy can take the property, and he's the one that's put all this work and money into it. He should have it. That's just how it should be. So, so that's my trial and tribulation. It's something I've just learned recently, and I just find it pretty interesting, and I'm looking forward to some updates on it. So,
wow. So similar to like you mentioned, I've got several borrowers who they completely go dark, and then they get something from the attorney, and then literally one of them called 13 times within the span of like 20 minutes when I was, not available to call. And, they basically will call, and when I get them on the phone and, basically, I let them know, who I am, and also the call's being recorded and so forth. And, they keep making statements like, oh, you said this or that. And I'm like, no, I didn't. And I always follow up every conversation with an email. And I'm like, what was agreed to is you would start paying, $500 starting on the 3rd, as well as pay the water bill that's outstanding. And I called yesterday and the water bill's still outstanding. And, so you kind of just get this runaround where, it's challenging because there are people who are, I'll call them professional borrowers out there. From that perspective. So it's just interesting, and trying to sometimes deal with the dynamics on another loan. The borrower was in legal and reinstated. As part of the reinstatement, we did a conversion from a land contract to a note, and my phone's not with me right now, but I documents got recorded earlier this week, and the guy called me up thanking me, and he'd been trying to get this done with prior lenders for years, and just how thankful they are. So it's good to see that component to it as well. So for me, not really. I mean, it's a typical I say trials and tribulations. I did get an email this morning actually that I thought was a little odd. I got to call an attorney on because I have a loan in bankruptcy, and there's a notice that the tax lien was sold on it because taxes hadn't been paid. And they're like, well, the loan's being escrowed. Why aren't you paying the taxes? And I replied back. I said, taxes weren't paid because the borrower hasn't paid in like 32 months. So, I was like, I honestly, we were in foreclosure, and I thought we would have had the property back by now. But the property has equity and from mine. And I told the attorney, I'm not going out of pocket just to continue to let this guy not pay,
Right.
let him step up to the plate. And I said, I'll reach out to the tax sale guy. I'll pay him $5,000 to take the property, and then foreclose from that vantage point. But it's interesting because I did, ask in this kind of note and bolt moment too, similar is I did ask the attorney, I said, hey, how come, we can't foreclose in a lot of states right now, but tax departments can foreclose, and take a property. And he basically, his comment was in a lot of these states, they're technically not foreclosing, they're selling the taxes and basically it's, more of a sale where they're selling it to get paid, and it, may be considered losing the property. So he was kind of like, he's like, you're not going to win that battle anyways.
Legally, it's a different mechanism, basically.
Yeah. So that's kind of, some of the stuff, but your story is pretty interesting.
Yeah. I mean, we've also, as been dealing with a lot of servicing transfers, trying to get some loans boarded, and we've been doing
it's like dealing with what's the two guys from Dumb and Dumber,
Lloyd and Harry.
Yes, we're dealing with Lloyd and Harry right now.
It's unbelievable. But yeah, I feel like at some point we should do an episode just on servicers. I know this year personally I've dealt with 4 different servicers from many different angles. I know you've dealt with a bunch over the years, and they're all different, and they all have pros and cons.
You want to get my blood pressure boiling? So why don't we roll into kind of our main segment, and which is again talking about 2 years, which seems like a long time, but it's really not. And I'll start briefly that 2 years ago, started a podcast. There was really only kind of 1.5 note podcasts out there at the time. There's a main one. There's another individual who's kind of doing like 10 episodes a season as well, and so forth. So there wasn't kind of, now there's, 5, 6, 7, which is good for people to get different information from other people. But it just felt like an opportunity when it was started with Gail and I to just tell our story, and share, because I'd drive home from work and I'd call her up or something and just be venting and so forth, so on. And I'm like, jokingly, like, we got to monetize this, which, actually we don't make money from the podcast. But not directly, but, and just tell our stories, because everything out there that you see from the trainings and everything else is, oh, I'm going to make, $1 million my first year. You can start buying notes after the first weekend. And the reality of it is it's all BS for the most part. You could be, to make some of the numbers people project in the first year, pretty much impossible unless you've got a few $1 million you're investing. But for most of us who are, looking to dump, 25, 50 grand into it, you're not going to make money your first few years. Typically. I mean, you'll make some money, but you're going to want to reinvest it into better systems, so forth. Would you agree?
Oh, totally. I really do think that's what, I know for me, I've received a lot of value from you and Gail over the last couple of years through the podcast. And I think one of the things people really liked about it, still like about it, hopefully, is that you guys told it like it is, like you're saying. It's, we just did 2 weeks ago, we did the pros of note investing, and then we followed up with
Cons.
cons. And it's like everything has pros and cons. So I think, there's a lot of value there for people. And I certainly took a ton of education from it. So I think people, it just, there's people are drawn to that. They trust you more because of that. So, yeah.
Which also, I'll say, kind of puts you at a different level, because people a lot of times, think that people who are on radio or, talk a lot about or provide some type of education are, people you can trust. And, so you got to make sure that your image and so forth, just, you got to make sure you're trustworthy and try not to be too controversial. I'm not trying to, have this podcast be like a Howard Stern, component or anything like that. It's just kind of tell it like it is, but, also kind of preach, teach. And I'm curious about, Jamie, 2 years ago, if you can look back and stuff, where were you in your note business?
So I had officially, started Labrador Lending LLC, and I had you and I had our JV deal.
Yeah.
Nightmare on Elm Street.
Yep. Go listen to that episode.
Exactly. I had the short answer is I was still pretty passive. I had gone to, the I guess the Paper Source Symposium, and, read a lot, and, read some books, and was just kind of getting educated, but also had some money invested. So I was moving toward becoming more active. It really wasn't until 2019, first maybe February, March, where I kind of really said, okay, I'm doing this. And that's when I got much more active. So 2 years ago, I had a JV deal with you. I had a deal in Jackson, Mississippi. I had some other funds through the LLC invested in more passive ways. But that's really it. I was still just learning.
And right now you're what, 35, 40 assets?
Yeah, about 30, in that range. 35. Yeah.
Okay. Mm-hmm. So for me, 2 years ago, most people, probably, didn't even know who I was in the note space. I was pretty much, I'd say I was very similar to where you were. I was around 35, I think 45 notes, somewhere plus or minus in that range. At that point in time, I hadn't been on, other podcasts, other guest speakers, I hadn't done any of that. So, people who who knew who I was kind of just heard me kind of through networking. And at the time, I'm like, wasn't even sure if the podcast would go anywhere, because it was, there was another podcast that was out there that, was, probably had 97% of the market share at the time. And, fortunately, I think, this podcast has done very well. I'm thankful for everyone. I mean, it's because of the listeners, of course. If you're not listening, then, we're basically talking to blank screens. And, I think we've done very well to, take a good amount of market share, but I think it goes back to just sticking with our guns, being honest, having the integrity, and, like you said, telling the story. But I just want to kind of highlight, certain things for people, because, people think that, getting started, it's like, there's not room in certain avenues or areas for people for growth. And, at the time, I didn't think like starting a podcast would be able to grow it to where it was. I joked like, we'll never get to 100. We'll probably quit like most people after 30. And, just started gaining a little bit of momentum, but we had fun doing it. And whether, I could have no listeners right now, and I just enjoy talking about notes from that perspective. But, and again, I just kind of highlight again, 2 years ago, Jamie, you were just like, pretty much getting started in notes. Now you've kind of grown to, having a true note business. There's a difference, I think, between being a note investor, investing in note, and have a business. I've gone from kind of where you are now to, I've got 250 plus notes in my portfolio, and kind of really grown it into a, I'd say a legitimate business that I've got. And, we're, looking to continue to grow and continue to provide a lot more, things for our listeners and for people in this industry to assist them in growth.
Yeah. And I think also I do think the Facebook group has helped, because we're interactive on there and we get feedback from people as far as, I did a recent poll in the group for episode suggestions, which we need to look at more closely. But I think it's also the fact that you and Gail were doing the weekly open mic nights, which I think was helpful. So, it's not just two people or just you sitting here spewing information, because that could get old. No offense. But it's interactive. And so we're trying to meet people where they are and figure out what their needs are too.
Yeah. And honestly, when Gail decided to she wanted to go, do other things and so forth, I was doing the podcast for a little while by myself. And for me, two things. One, it didn't feel natural. I felt more like a professor almost, of just like preaching. So I found the first sucker who would want to, come on. Thank you, Jamie. And, it was more because I like the dialogue and the conversation back and forth. And, I could have guests and so forth, but a lot of them, individual or differently. It was more for me. I think it's better having multiple people, also multiple perspectives, because certain things I probably now take for granted because I've done them so many times that I forget, how difficult certain things were. And I have to sometimes just retrain my brain to go back and look at some of the difficulties or things that people have. But you mentioned a Facebook group, and I just want to quickly touch upon that, because you're right. I remember starting that and thinking like, I got 100 people in that group, and I was all excited. And, right now we're probably, about 1,300, plus or minus people in the group. And, they say it's typically, I think, what's the ratio? 199 or 1990. You got 1% of the people who are very active, 9% of people are pretty much active, and 90% of people are just kind of blah, which is, probably the case. But still, I think there's some good value for people in there to pose questions, ask things, and get more information from people within that. So
you mentioned guests. I just want to mention briefly that we do have a pretty good schedule here coming up with some high quality guests. So
we've got Dave Van Horn's going to be coming on. So Jamie was able to get Dave Van Horn to come on. We've got Debbie Mullins will be coming on to talk about kind of end of year bookkeeping, get ready for next year. I was doing, I told her yesterday, Jamie, just throw some dates out there. And that one we're going to do live. So I spoke to her. We're going to do that one kind of a live webinar type, so people can ask questions, because listening to somebody talk bookkeeping, it can get very confusing. So, and you'll have questions, and it's just easier to ask them in person. From that perspective. So.
I know you lined up a bunch of other guests for the end of the year.
Yeah, I mean, I can't name them off the list. I'm one that popped in my head because he sent me something last night. Like, for those who invest in Cuyahoga County, I've been speaking with James Wise of Holton Wise. If you're familiar with Bigger Pockets, you know who he is. It's a little controversial sometimes based on, some of the things. And let's just say he's not afraid to say what he says, especially from a political front and so forth. But I enjoy him and Russell Brazil, who Russell's in my neck of the woods. And they're the two opposites, actually, from a political standpoint. One's very liberal, one's very conservative. And but they get along, which is kind of, I think, good.
Wait,
in the sense
what? You get along with the opposite party?
Yeah, I know.
It's unheard of. Rod Khleif, I think, is another one.
Yep. So
he's got a big following himself. So he's got some really, really good guests lined up. So stay tuned.
Yeah. So one of the things, I'll pose to you, Jamie, and kind of we'll do a whole nother goals session later on. But, for people who, look back at where you were 2 years ago, what are, if you could name two things, not give you one because you'll probably end up with two, and I'll say two and I'll probably come up with 20. What are, one or two things that you think have been the biggest contributors to you besides your wife and being successful, who's hidden behind the scenes and really the face of the organization and so forth, which we do have to get Emily on here at some point in time.
Yeah, we should. I would say, I mean, businesses boil down to people and systems. So I think I do think hiring Debbie was key, getting a really quality bookkeeper, which I'll talk about that later. And I also think we use Podio. We use a note tailored system on Podio. Podio is free. We pay a little bit for this. It's called Portfolio Activity Center. It's nothing extravagant, but it really is extremely helpful in monitoring our day-to-day workflow. I just hired a contractor to help me with asset management, Stephen Burke, and he's doing great. I think the fact that we had this system in place, I mean, it's allowed me to, kind of just hand it over to him, not entirely, but it's pretty user friendly. So I didn't need to spend weeks training him. He's kind of learning as we go. But I think having the bookkeeping system in place and then our daily workflow system were pretty critical. So, there's I could give you tons of answers to that question, but those are two pretty key ones, I think.
Yeah. But yeah, I mean, systems with any business to be successful, you have to have good systems. And, the other thing I'll mention that I think is bigger than systems when I look back is consistency. I really, truly believe consistency is the key. And you have to have your systems, but you gotta, be consistent with them. You can't, start and stop things. And, if you want to be serious about this, you have to be serious about it from that perspective. And I see so many people who want to be note investors, then they realize, and they'll take some training and then realize it's much harder than they thought, which it is. But, you really, truly got to have consistency. And, the other thing I'll mention about it is, to grow in networking, because a lot of people talk about networking, and I think we should do a whole show about networking. Mm-hmm. But I don't know how many times I get emails from people like, hey, can you send me this? Can you send me, do this for me, and so forth. And that is the 100% worst thing you could possibly ever do if you want to turn somebody off. I compare it to walking up to someone you're attracted to and just asking them, hey, can we just go right to bed right now? I mean, literally, it's, what do you think's happening? It's, slapped, kicked, or punched.
That doesn't work for you?
What's that?
That doesn't work for you?
I don't know. I've never done it. So, but you look back and, networking is kind of like a relationship where you kind of want to learn about that person. And, when you think about, when you met Emily, you were probably, approaching her like, okay, how can I help you? What are your interests? Kind of engaging in the conversation to see how, what benefits both of you. And that's kind of like, I'll use networking as that perfect example, because when people send me that stuff, it kind of is like, okay, but network, that's same thing with like schmoozing. It's you always should be the side of generosity, and what can you do for those individuals. And people know I give a lot of stuff out for free, and I've been helpful to a lot of people, and I feel like I've been generous, and that's how I've been allowed to grow, because people reach out and say, oh yeah, talk to Chris or this or that, and next thing you know, this person's like, oh, maybe you want to invest with Chris or whatever it is. So
I just to piggyback on that, I think the podcast is one major way that you've given back or given added value to people. For me, not quite the same following, but we put out normally once or twice a month a blog post, whether that's a story about what we've done or whether that's more educational. Lately, it's been more educational, but I figure, okay, if I have to research something, why not write it down and share it with other people? So, that's just a way that it's free. And I've gotten a lot of interest from note investors and people who want to buy partials and different things. I think that's also helped our business, because we've, freely tried to add value to people. It helps me too. I mean, helps me to organize my thoughts and to better understand a particular subject. Like, what's, a year and a half ago, maybe really what is the difference between a CFD and a note? Well, let me research that thoroughly, and then let me write it up and put it out to people. Why not? And then once it's out there, I can go back and refer to it. Again, I'm not suggesting I have this massive following, but it has definitely helped, I think, with what, networking. I don't think either of us love that term, but it's, you try to add value, and then eventually that comes back.
Well, it's even like when we talk about this episode, like, oh, we're going to talk about like your favorite episode or this or that. And, honestly, I'm like, no. And I'm like, because it doesn't have value for the people listening. I mean, I could go back and think, okay, what was my favorite episode? I honestly don't know which one was my favorite from, any perspective.
Well, it's obviously one, either my Jacksonville episode or the one that I was on before that. No, I'm kidding.
But and it's from that perspective, every episode is different. Is there kind of a favorite one? No. I mean, there's not one that sticks out. There's some that, I loved, talking about partials because I just love the creative financing side. That's why the story about you mentioned about selling and stuff, it kind of like burns me. I'm like, damn, why did I not think of that? It's kind of like, I feel like I lost today already. Got an L in the column because I didn't think of that. And I'm usually one that comes up with this, crazy ideas from that perspective. But I really wanted to focus more of this episode just kind of talking about, 2 years ago, you and I, if you asked, every person in our Facebook group, right now, if they knew who we were, maybe 20 people would have known who I was, as regards to note investing and so forth. Maybe a few more because I, was, on some weekend courses that, did a lot of marketing and so forth. But, by no means, did we have, the type of, people who reach out to us now. And again, thankful for all of that, and it kind of just, puts things in perspective where, try and continue, going to try and continue to grow and, help people as time moves on. And, 2 years from now, or actually in 12 months from now, I'm hoping that, I've got, off to bigger and better things, which again, we'll do another episode about our goals for next year.
Yeah. And I do want to reiterate that it's been a lot of work, right? I mean, for me, right. And I know it's been a ton for you, but I just don't want people to think, oh no, you just, get your Podio system and hire a contractor and you're good to go. Or, it's not like that.
I was up till 1 o'clock in the morning last night.
Wow. Yeah. I mean, now I really enjoy it. I mean, I really do. I don't enjoy every minute of it, but I just like having my own thing and my own business. And I really do like note investing, real estate investing in general. But so I don't, I enjoy the work, right? But it is work. So it's a lot of work. I mean,
it can be stressful.
Yeah, absolutely. I mean, I'll come home on the days I go to my quote unquote real job, and I'm pretty much straight to notes. I mean, and I really enjoy it. But it's a lot of work. So I just don't want people to think like, it's easy, because it's not.
No, it's not. And I'm just looking at the clock right now, and I've got, 7 minutes and I start my real job. And actually that's something that Kimberly Banks Fawcett asked, like, to do an episode of kind of, my day and, how I do it. And I would love to do that. And, it's probably one I do live and kind of show people.
Well, yeah, I said you're like Herschel Walker. You sleep 3 or 4 hours a night. She was betting on a time machine or a dual, a clone mechanism, cloning machine.
I really wish I had a twin, and all of a sudden, just like one episode, all of a sudden say, it's really not me, and have like another me just pop in or something like that. And people will be like, WTF, like no wonder. No, but it's interesting because actually, the guy's a paper stack. Brett mentioned speaking to him recently, and he's like, yeah, Rick and I were talking about you and stuff. And because people do say like, oh, you can do it with a 9 to 5 and so forth, and scale, and again, I don't want this to come off sound arrogant, but I've got so many systems in place, and I'm used to managing very large projects and a lot of things. So for me, it's easier to scale because I have that experience, and they've kind of mentioned it's, I'm probably,
You're more the exception.
yeah, I'm not as much the norm. And I don't like saying that, kind of just like,
Yeah.
and we joke about, sometimes about like Jordan and stuff. And I'm not, by the way, I'm not comparing myself in any way, shape, or form to him. But the thing about that, I relate to him in that sense. Why I'm saying this is, he'll never come out and say like he's the best or he's kind of the exception. He comes out and says people are from different times, different eras, and so forth and so on. He's very humble about everything. And same with me. I mean, I try and push people, to get them uncomfortable, in some instance, to push themselves. But my guess is, most people, probably aren't going to be able to run a 250 asset portfolio working, 9 to 5, but you don't need to. That's the other component is, it's all based off of, what your goals, where you are in life, and, setting up for success and understanding it doesn't take 6 months. It does take, or 6 weeks. It takes years.
Yeah. And I also think in note investing and real estate investing, you find, a lot of sort of engineer types. We may have touched on this before, but, kind of analytical types who don't really like to take action necessarily, or the opposite, where people just wing it and don't even know how to crunch numbers and don't even look at numbers. So I think, and, I think you're one of the rare cases. I don't want it to go to your head, but it's like you can do both and you have a drive, so I don't think it is for everybody, to be honest.
I mean, and it's, damn, I wrote it down and I don't have it with me. I'm going to bring up on another podcast, but it's a term used that how you get, like, the first time something happens to you, it's like, oh my God. And then when it starts happening continuously, it becomes kind of the norm. Yeah. And that's kind of like what happens in this business. The first time you get, I'm pulling out right now, a court order affidavit that says failure to appear in court undefined citation. At the police station, you'll be booked and processed for arrest and criminal offense, which is punishable by a jail sentence of 11 months and 29 days or a fine up to $2,500.
This is to you?
Yeah. So the first time you get this, you basically, need to go change your pants. And now that I get these, it's, do I look, and what this is for, is, it's a contract for deed, or a lovely contract for deeds. And the borrower's in a neighborhood, where, it's, it's for open storage. He needs to clean up the yard. And I spoke to the inspector yesterday, and he said, yeah, the neighbor had a court date this week. So your borrower was helping that neighbor get everything, which they took everything from his yard and now put it in your yard. And he says, what's going to happen next week is they're going to take everything from your yard and put it back in his yard. And I just laughed. And I said, yeah, that's probably the case. So I called my borrower who, I mean, this is a performing loan that has huge amount of equity in it. So I'm actually in the process of, I talked to the inspector. I'm like, I'm just converting this. I'm not going to, and I told him where we were with it and so forth. But it's kind of that component of the first time you get that, it's like, oh my God. And now it's like, yeah, whatever. And I call them up. It's like, okay, $100 fine, pay it. So, it goes away. But I've been on, construction projects where I've made, $75,000 mistakes. But I remember those like they were yesterday. And I can tell you one about a slurry wall, which most people don't even know what a slurry wall is, and so forth. But so you just, from understanding all of that, I think it just kind of allows me to not get super excited, which I still do a lot, which I kind of blasted somebody this week. That'll be another story because we're running low on time. So somebody basically thought I was being dishonest and flat out called me a liar. And oh man, just please don't do that. If you think I'm being, if you think I'm being, yeah, I think I'm being dishonest. Reach out to me. Don't post something like that because yeah, it's not going to end well.
But yeah,
By the way, the guy is funny because I was so ticked off at the guy. I ran a skip trace on him, and the guy's been like arrested for trafficking cocaine or something like that. So I'm like, oh yeah, even better.
Consider the source then.
Yeah. So why don't we roll into our notes and bolts for this week?
Sure.
So
Yeah.
what do you got?
So mine, I know we've touched on bookkeeping during this episode and previously, but bookkeeping is really important. And I'll give you an example, a little lesson that I had this week.
Does this involve me?
No.
Okay.
No, but so I also had my year-end meeting with Debbie a couple days ago. And I mean, my brain is always fried after those. It's just.
Are you making money?
We'll talk about that. But the point is,
by the way, my first 2 years, I did not make any money, people.
So, I mean,
I reinvested everything is what I should say.
I would be, but I'm selling so many partials and just reinvesting everything. So, but something came out of our bookkeeping session that I never expected. And that's that I realized that I didn't have insurance on a property. And, so not to go down the rabbit hole too far on this deal, but our Jacksonville property that we had a note on and ended up doing a deed in lieu and then took back the property. It's now a rental in a different entity that we own. I don't pay as much attention as I should to it. And so the insurance had been canceled 3 times because Florida is tricky and different reasons. So these insurance providers will give you a policy and then just cancel it 2-3 weeks later without even talking to you. So that's what happened 3 times. Well, my insurance guy had told me in July, oh no, we fixed it. It was a signature thing. It's good to go. So I never followed up. I just, took his word for it that it was fixed. Well, I'm looking at going through our books with Debbie for this particular LLC. And she says, well, you have, checks going out to all 3 companies, and then you have checks coming back in from all 3 companies. It looks like you don't have, dude, she's she won't call you stupid, but she's very nice. And I'm like, so you're telling me I may not have insurance on this property? Yeah. So in the last couple of days, that's what I've been working on. Is we just got the policy reinstated yesterday, but since July, I didn't have insurance on this property that I've had a tenant in Jacksonville. And
there's been a few hurricanes.
Yeah. It's now November. I can make all kinds of excuses. It's on me. But my point is, bookkeeping isn't just about, you need to get every little penny put in the right spot and make sure your taxes are low. It can actually help you manage your business and mitigate risk in other ways. So that was a big takeaway for me.
So there's a few things I do also with my the bookkeeping. And this isn't actually my note, but I'm just going to throw this in there. One is on your expenses to check to see, especially if it's non-performing and you're in legal, make sure that your servicer's accounted for all your expenses. When, I've had attorney bills that I've sent them and then I'll run a payoff and then it's not showing up. And sometimes when I get payoffs, I'll open QuickBooks, run, a balance sheet detail, which shows, basically all the expenses, be like, oh yeah, I paid, $3,000 to this attorney, but it's not showing up on the payoff. And they're like, wait a second. So then I'll go through, find the email, and then I'll email back service. I'm like, hey, can you please? And they'll come back and say, oh, it didn't note on it that it was recoverable and the attorney just forgot it. But that can be real money
yeah,
from that component.
Yeah. One thing really quickly that I find interesting is from a bookkeeping standpoint, performing loans are a lot more work, whereas non-performers, you might buy it, it might just sit there and then you get rid of it. And Debbie doesn't have to do much, right? But the performing notes, there's a lot of payments, interest, principal, where's it all going? There's a lot more work for her on those.
Yeah, people, and Debbie can talk more about this, but people think, oh, I got to pay them $400. No, you got to break that payment into principal and interest. Whether you're using an IRA or whatever it is, just, it needs to be done, especially if you've got money from people, you got to break that down, because then you got to look at how your JV deal reaches, because do you put the principal back in and hold those reserves and then pay it kind of like a fund where, it basically sits there and covers expenses, and then you give the interest. And, so when people say, oh, you're getting a 50-50 of the payments and the payment's 500, but 200 is principal, 300 is interest. Are you getting 250? Are you getting 150, which is half the interest? It's, there's a lot of crazy stuff, which people are like probably scratching their head what I'm saying right now. And I could show people on paper another time. But that's a whole nother episode and we're running late on time. My note and bolt is actually because I got a text from somebody this week who has an asset in Florida that they haven't insured. And basically, because it's an REO, and then they got forced place insurance on a property, and they didn't realize in the property that it excluded named storms. And basically they had some damage. I believe they had some damage from possibly a storm, and it's not covered. And basically that's kind of a big WTF moment. But understand, so like I have JB Lloyd, and I have I have like an investor policy. There's a lender policy which doesn't cover as much as an investor policy, which covers REO, CFDs, and everything else. You really need to understand what it is you're buying. I mean, I had a contract recently, not on insurance, on something else, actually kind of insurance, different type of insurance, where I went back and read the contract after again and realized, got me, they made a complete screw up. And now basically they're like, yeah, we completely screwed up, but guess what? We're only liable for this much, so you're screwed. Thank you very much. So yeah, so make sure, like on insurance, in general, like, what, especially if you're buying stuff in Florida and stuff, what's it cover? Does it cover wind? Does it cover flood? Does it cover name storms? There's a lot you basically should be asking those questions. So,
yep.
Good. Jamie, any final thoughts as we wrap up second year of the podcast?
Looking forward to the next period of like we said, the guests coming up on the podcast. And then if anybody has any questions about servicers or anything like that, feel free to reach out.
Yep. So thank you all for listening to this episode of the Good Deeds Note Investing podcast. I'm Chris Seveney along with Jamie Bateman. As always, looking for more information, join our Facebook Notes and Bolts group, and make sure to leave us a review on iTunes, Stitcher, Google Play, iHeart, Amazon Play, and all the other listening apps. Thank you all and have a good day.